This is Mike West Jenkins, and this is the Science and Numbers Forecasting the Stock Market Part 2. In my first YouTube video, Mike West Jenkins' Science and Numbers Forecasting the Stock Market, I demonstrated how the market was very mathematical and the prices of the final highs and lows had numerical equivalents of both time and price factors that could be used for forecasting future market turns. These factors often were trigonometric, like the tangent of 30 degrees, or the decimal shifting of price, or just prices time multiples. In short, I demonstrated that the market can be forecasted well into the future, often down to the exact day and one price point, and what is frequently espoused on Wall Street as fundamentals or analysis is basically of little value. In this video, I will expand on the numerological time factor forecasting methods, demonstrating how you can prepare yourself for potential major market turns well ahead of time. While some may criticize that these cycles are hard to predict, no one can argue with the facts that they do work. It's up to you to dig deep and do the work to discover the key cycles. It is of note that the simple cycle of 2339 days from the October of 2002 low mentioned in the last video, if simply followed to its next cycle, you would have caught the big top on July 31st, 2015, just before one of those dramatic 1,000 point down day declines in the Dow Jones that year. Well worth the effort. In this video, we're going to be looking at the cycles of squares and square roots in particular. In this particular first chart, we can see that we'll be dealing with weekly cycles of integers squared, or whole numbers squared. Here's a weekly chart for Ford Motor Company. Starting at this low, we call it 0. And then 2 squared is 4. 3 squared is 9. This would be 9 weeks later. 4 squared would be 16. This is 16 weeks later from the origin. 5 squared is 25. 6 squared is 36. We see that these integers squared in terms of weeks are very accurate in pinpointing the major turns in this particular stock. And we find out there are cycles that expand in a spiral-like fashion, growing ever bigger, and the legs are getting bigger and bigger as we spiral out. This is a little gnomon representation of that. Here's a 1 square, and then 2 squares, and then 3 squares, and then 4 squares, 5 squares. And down here are the various squares and dates from a major origin low. And we can see that many of them are where the big turns were in the market. Some of them were right in the middle between 2 squares. So we will find that these integers squared go on for years and years if we keep track of them. Usually the easiest way to do these squares and square roots is with something called the square of 9, a device that W.D. Gann used quite often, but it's really been around for thousands of years. And it's a spiral arrangement of numbers out to 9, and so it goes around clockwise, and the odd numbers go down the left column here. So this is 3 squared is 9, 5 squared is 25, 7 squared is 49, 9 squared is 81, and the even squares go up the right side. So 2 squared is 4, and then 4 squared is 16, and 6 squared is 36, and 8 squared is 64. So we also call this the odd and even numbered squares. And we would note that there are 8 angles, and these are primarily called the cardinal cross, which is like the compass, north, south, east, and west. That's a cardinal cross. Or the fixed cross, which is the cross that goes through the corners. And we see that after we go around and get to 9, a new rung starts at the odd number, at the end of each odd number. So this is 10, that goes around to 25, and then starts a new number at 26, goes around to the next odd square, 49, and starts at 50, and this goes on for quite a ways to whatever size we want to make it. The more traditional square of 9 looks like this. with at least runs out to 361. It's also known as the square of 19 because 19 times 19 is 361, which is a very close approximation of the 360 degrees in a circle. And if we spiral out our numbers, we can enumerate through angles going up from each of these numbers. On the outer rung, we can put the days of the year and thereby incorporate a number that corresponds to each day of the year in a circular fashion. The mathematics of this particular layout is such that if we take the square root of any number and add 2 to it and re-square it, we will get the next rung out. So if we were at 86 here and we squared that plus 2, we would get 127. Or if we were at 96, square root plus 2, we'd get 139. Or 145, square root plus 2, we get 97. You can also do a square root plus 1 and get halfway around the wheel. So we are at 265, square root plus 1, we'd go around to 298 over here. And so we can do mathematics not just on the cardinal and fixed cross points, but if we had a stock that landed right smack in the middle here at 179 or something, we could take the square root of 2 and find out what that number is. So this is also called the odd and the even squares and the square of. To give a very quick example of how you might want to use this, we see that the October of 02 low to the October of 2007 high was exactly 5 years, or 60 months. And we see as we got to 60 or 61, we were coming up to this cardinal point straight up at 61. And then from that top in October of 07, the market declined until March of 09, 17 months later. So from that 60-ish, basically we add 17 and we come out to 77. And we see that's in opposition here from a high at 60 in October of 07 to a low opposite those numbers at 77. And then 2 years later, in March of 11, we had another high, and that was 24 months, or 77 plus 24. It got us around to 101. So each of these angles in here, and note there are 8 angles, so and they're each 45 degrees. So if the mathematics were a square root of a number plus 2 gives us one full cycle around, but there are 8 of these little 45 degrees. To go each of the 45 degrees, we merely would have to take the square root of the number plus 25 cents, because 8 times 25 is 2, which would be the full cycle. So square root plus 25 cents re-squared would give you this number. Square root of that plus 25 cents re-squared would give you the next number. Square root of that plus 25 cents would give you this one. So this way we can take any number, any high or low on a stock, and immediately find its natural 45 degree resistance going around the wheel. Here we see the effect of that. From the October of 07 high, which was 60 months from the 02 low, the first big break point was 65 months later, and then 69 months, and then 73, and then 77. So we see in here from the 61, 65 was the next break point, then 69, then 73, then 77. And so we see a nice rhythm here in terms of months from a major high or low origin. Instead of using the square of 9, we can do this mechanically by hand. We can take, for instance, the low in March 6th of 2009, which is approximately 666. We can take the square root of that, 2580, plus 1, re-square it, and get 718. Now you would think, since this was a number, a price, when we increment it, this 718 would be a number too. But no, it's not. If you remember the first video I did, I told you how time and price alternate. And hidden in the price of the origin is a time factor. So this 718 is really a time factor. So from our origin date, if we add this increment of the square root of the price plus 1, we get a target of the time. So that comes out right here, and this is the high. We can follow this up and say, okay, if this was the square root of the low plus 1, we can then do the square root of the low plus 2, get 773 days, and that comes out to 418 to 11 right here. Then we can do the square root plus 3, 830 days, that comes out right here. The square root plus 4, 888 days, that comes right here. So we can see all the way from this one origin point, we are now pinpointing this reversal, this reversal, this reversal, and this reversal. So it's quite easy if you do the work to set up these cycles. You don't merely have to do this one. You can run cycles off this one, and cycles off this one, and cycles off this. It's just a question of getting yourself organized and keeping track of where these big cycles are coming from. On my website, I do give out a free square of 9 program that looks like this if you prefer to use the square of 9. Here's an actual live one. It's also square, I mentioned the square of 19 because that goes out to 361. So this one works pretty well for most medium price stocks. So in other words, if you had a price of 96, the long-term target would be 139. But along the way, you would get resistance at 101, at 106, at 111, 116, 121, 127, 133, and finally the big one at 139. If you were started at a low or a high of 101, you could go up to 145. You would also go around through these other numbers, but the primary targets would be up along here. So you could use that. We'll clear this out for a moment. So on any price stock, remember all the rows have to be odd numbered rows. So this is 19. The next odd number would be 21, which we could get a 21 unit now that goes out to 441. Or if we're using something like the S&P, I think that's our unit 57 right now, which gets us way out here. So that would be from 2679 to 2890. 2653, 2867, going down a bit to the center, 2636, 2627, and 2839. If we went directly down below, we would get a range of 2783, 2570. We also go over to the side. We could find out that we're in a range of 2757 is one of the key pivots. So we can go all the way on these things and find out on the S&P, or if it's a stock or a commodity or wheat or soybeans, and we can see these levels where they might trade to. So that's a square of 9. It's handy, but you can do these mathematics very easy just by hand, like we did here. You take the square root of the low plus 1, plus 2, plus 3, etc., and find out which one works best for you. I mentioned in the previous video how the master numbers run off the square root of 2, the square root of 3, and the square root of 5. So out of the one circle, we take a radius and swing it over to the level and draw a second circle. And now we have, based on the radius of the circles, 2 boxes. And we know that a box with a unit of 1 unit length, a radius, and 1 unit length, the diagonal is the square root of 2. And if we have 2 boxes lined up, we have a side of 2 and a length of 1, that's the square root of 5. And then in the center, where these circles intersect, we have the little sign of the Christian fish called Pisces. And this is the square root of 3 in between here. So these lengths, square root of 2, 3, and 5, encompass most of the big turns you're going to see in your lifetime. And here was an example from the last video where you can take any stock or commodity, take a major swing, A to B, draw a circle around it, from B to A, draw another circle around it, and draw these little squares. And then we'll have the square root of 2, square root of 5, square root of 3, so that this A to B length will again repeat in C to D. These are the same lengths. Or the A to C, which would be A to C here, is a square root of 2 length right there. Or the DE is a The small one right here is 1/2 AB, or one of these smaller lengths. So we will find that all future fluctuations are just one of these segments defined by this initial breakdown of the square root of 2, 3, and 5. Now we can do this manually, of course. Here's a chart of Netflix on a daily chart, and the low was $80. So if at first we took 80 and we multiply it times the square root of 2, which is 1.414, we get 113. Well, 113 was basically the price here. It was 112 and change. But we can see over here it was also support over this area at the 113 price level. So from the 80 low, the square root of 2 gave us price. But it's also a time period, because 113 days from this low over here gave us this exact high right here. Now if we went back to that low and we did the square root of 3, 1.732 times our 80 low, it would be 138. We can add the 138 as a time factor from our low, and we get 625.16, which is this exact low here. So from this low, we're getting lots of information. We can take this low and get a price target. We can get a time target of a high. We can get a time target of a low. And we can keep doing this a number of ways to decipher where a great many of the highs and lows are going to be. If we take the big October of 02 low and do the major square root of 5, which is a big number, 2.236, times that, you get 18 days. And 1,718 days from October 10th, 2002 was 624.07, right where this little marker is. The price on that day was twice the low price. It was 1537. So we're seeing harmonics of the bear market low and time come out very close to the final high in 2007. Now, you know, some of these big long-term applications are going to be off a little by a week or two, maybe even as much as a month at times. But we can see here that the basic uptrend ended somewhere in here, and the big downtrend ended a little below, a little bit up. It was oscillating up and down, but in this time zone it ended. And the difference, of course, why it's not perfectly exact, is on that low day, it wasn't just 768. The high that day, or the close, I think the high was 804 and the close was maybe 802, 803. But there is a range. If we did the high of, let's say, 804 and multiplied the 804 times the 2.236, we'd probably get out over in here more for a bigger time period. So often when you have a distribution top like this, it's related to the height of the low day, what the low and the high are, and those are going to spin out time factors in a range. So it might very well be that, let me just see, the square root of that times, let's say, an 804 high would be 1798. So you see, that gives you almost another 70 days, which is like 2 months later. So June, July, August, maybe you have a low right here, or maybe you've got this other high in here, depending on the close or the high on that particular day. Now in the last video, I showed you how you can shift the decimal points around. So from that 768 low, we moved the decimal point, or divide it by 10 to get 76.85, and we wanted to use a monthly time cycle. And in each month, the average number of days is 30.437. In other words, 365 1/4 divided by 12. And that would result in 2,339 days, which we've used in some of the prior exhibits. And from that low, 2002, 2339 days is exactly 3609, the exact 666 low day. So we see these decimal point shifts are very important at times numerologically. Now, remember this cycle right here, I showed this in the first video a couple of years ago. If you had followed this through and said, gee, that's pretty good, I wonder what the second cycle of 2339 would have been. Well, here it is. The second cycle, or 4,678, from that big low, came out right here. 731 of 15. and then it deteriorated, and we had the huge 1,000-point down day. So it was a big crash. It clearly ended a big cycle. But even more interesting, you see, is the price on that day. It was close to 21.17 where that topped out, and the price low was 768. If we took our tangent of 30 times that key number of days, we get 1350. If we add our 1350 to the 768, we get 2118, or approximately 2117. So we had in that base price harmonics that gave us both a time cycle that was exact and a price that was exact, if you followed through on the math of these and was prepared for it. We can also use that tangent of 30 before and after. So the original 2339 was the full tangent of 30. If we did the tangent of 30 times the 239 days, which is 1350, and add that to October of 2002, we get 621.06, which was the major low. Again, off by a couple of days early, and there was a double bottom over here, but it does show us somewhere right in this area is a major low, and as we just saw in the previous slide, the next one comes out in June of 07, where the next big top was going to be. Now we did it on the other side. We took our target of 3/6/2009, and we added our 1350 from the target date, and we get 11/15/12, which turned out to be an exact low. But note, on that exact low date, the price level was our time cycle. It was 1350. So both the price and the time were related to the origin point and came together for a perfect low. And then, of course, we had another gigantic leg up in the market. We can also do these squares, and we can do square roots. And we can also do the decimal shifting of the square roots. So if we have a top price of 88.35, the square root is 9.4. If we now shift the decimal by 10, it's 94 days. And certainly that was the exact low. Here's one where we had a low at $33, but if we took the square root, which is 5.75, and multiplied it times 100, it gave us the exact length of the bull market, you know, a year and a half down the road, right to the day, and boom. Now you might say, well, why didn't you just use 10 and get 57.5? Well, you could have. It's probably one of these little highs or lows over in here. But the methodology is to try them all. Try the 33 days, 10 times 33, try the square root, try 10 times the square root times 100. So all along the way, you're going to find you'll get a lot of these other little hits along the way, but you'll always be prepared for these great big ones when they come along. Now here I'm showing the low was 43 and the bull market high was in this whole area about a month, 430 to 450. And the reason you have these tops that are spread out over a month or so and not just a solid day is because of the range. That vertical bar on the low day might have been from 43 to 45. So I'm saying, let's say the high area was 45 and the low was 43. So then you would be squaring out times 100, 430 to 450, and you'd have a 20-day range where the top would be squaring out just like this bottom was. So often you take the more conservative approach. You say, okay, let me use the lowest low as 43 because that's going to come out first, and if it doesn't break but it starts going sideways, then we use the high price on that day and square that out, and at the end of that period we often get the big breakaway. We were using calendar days and we did some months before, but also trading bars work perfectly too. Here's Amazon. The top was 847. The square root is 29. If we go out 29 trading bars on a daily chart, it gives us right to the breakaway from the low. Another perfect call if you're doing options and things, knowing where the big turn is going to come. Here's the numerology shifts of the square root too. The top here on Tesla was 387. If we take the square root, we get 19.7. So we can either do 19 to 20 bars. This is 19 bars. If you round that up to 20, we're 1 bar closer here, right to this top. If we do it times 100, we get 197 bars, and that comes out right over in here. Now these things don't have to be the perfect final high or low, but they're going to give you good trades. You know, in Tesla here, I don't know what this drop was, 340 down to 307 or so. You're talking 30-40 points on some of these little corrections. So they are quite significant, and you should keep track of them. Now if you're uncertain, you can always check your forecast by going backwards. So let's say we were following this up and we thought over here was going to be a top. We haven't seen the future yet, but we think this might be a top. We're at a previous top over here. Maybe it's going to be a double top. If you remember in the first video, I told you the cycle rule that if you're at a final high or a low, the number that appears is the cycle length. So if this 268 price is going to be a top, it would be a cycle length, and we can go backwards that number and we should find an origin high or low. Now in this case it was a good low. Some might criticize and say, well, it broke down here, but this is where it comes a little art of chart reading and knowledge about the stock market. You had a big low right here, and then you had a double bottom here, and everybody jumped in, and probably one of the big trading houses ran the stops. You see there's 2 bars here where they just ran the stops and then immediately regained them, and then you had the gap up. So in theory this was the low, even though technically Goldman or one of the big houses just ran the stops to get the inventory so they could take it up. But you should be able to check these things, you know, by going backwards. It works on anything, stocks, commodities, anything that's tradable. Here's the August crude oil, and the top just the other day here was a 75. And if we thought that was going to be a top and we weren't sure, we can go backwards 75 bars. And here again, it's a little bit of art. You could say, well, why didn't it hit the exact low here or something? But we can see that there was a little downtrend here, and there was a triangle wedge forming, and on or about this 75 bars was definitely a change in trend breakout. So if you see some kind of a new force from a downtrend to suddenly an explosion, an uptrend, that is a cycle. So that would validate for you when the stock is at 75 and maybe drifting for the 3 or 4 days over it here. You might want to be encouraged to put on a short with a stop, knowing that there was going to be some dramatic reversal. And usually if this is a high, this is probably a low. So from a low to a high, you'd probably have a breakdown again. So in summary, we always use the integer additions to square roots. We take the square root of our number and we add 1 plus 2 plus 3 plus 4, and we re-square them to get time counts. These additions are interchangeable as time or price. So on the square of 9, we could look at the targets, you know, going from 96 to 136 straight up as a price, but it can also be a time factor. You also want to focus on the big square roots of 2, 3, and 5 because they occur most of the time. You can also try the tangent of 30 cycles as shown in the last video from the highs and lows, and take that price times the tangent of 30, which is one of the square roots of 3, remember. The tangent of 30 is 0.577, and 1 over 577 is the square root of 3, 1.732. So that is related to the square root of 3, 0.577. And you always check your forecast by going backwards. So basically that's a couple of good tips for you to watch. That and the previous video. Check out the archives section on my website and the trading tips for a lot of free programs. We note on the website here, there's books, there's trading videos, there's a whole astrology course if you're into the Gann method. There's past newsletters, daily emails, there's an MTA video, there's free computer programs and lots of trading tips. So I'm hoping you'll come visit and see all the good information that we have there.